Good morning. I'm Ross from Lifetime Property Accounting, and we're just going to go through two tips on how to reduce capital gain tax if it comes in, and just things that you should be thinking about now. So, this is January 2026. We're looking at simple tips that we should be considering now and looking at. And this case study is from a client that I was chatting to last night, and it's 131,600 of possible capital gains tax savings just by thinking about things and yeah, just bearing in mind that this could come in. So to start off with, capital gains tax only if Labor wins. So it's only Labor that's proposing this at the moment. So obviously we're about a 50-50 chance at the moment who is going to win between Labor and National. So it means to me that we need to start considering this and just make sure we're planning in advance, not leaving things to the last minute. Labor at the moment, I think their capital gains tax proposal will change, but they're saying that it will start 1st of July 2027. So that gives us around about a year and a half to get organised if we need to. Case study. So like I said, January 2026, discussed this with the client yesterday. The client is not called Bob, but Bob has a 4-unit block. Wants to subdivide and add bedrooms. It's looking at costing about 230,000. Expected gain in property value, we're looking at it going up about 700,000. So you can do the maths between those two numbers, but there's a good capital gain or good equity gain, a good gain at the moment. We'll talk about it between those two numbers. So what should Bob be doing now? So obviously we've got the possibility of capital gains coming in. If it does come in, ideally we want the project finished by the 1st of July 27. So we want titles available for the subdivision. We want the rooms added. We want it all neat and tidy, everything finished so that potentially, yeah, that value is at its highest possible point. We might also need to get a valuation obtained at that. So the two key tips that I'm talking about and planning for capital gains tax is get your projects finished before the 1st of July 27 if it's a long-term hold, and be nice to your valuer. Start getting friendly with a valuer because we might need to get a valuation obtained. So in this example, we want Bob to finish off his subdivision, get his titles, maximize the valuation as much as possible, and most likely he'll also get a valuation obtained on completion to get that highest possible price. So the numbers in tax savings, we currently value 1.4 million, cost to subdivide and add the bedrooms 230,000, expected value on completion from the value is 2.1 million. So that's where that 700,000 gain in property value came from. Actual gain in value once we include those costs is 470,000. So that is a huge gain by doing this project, really good project. And there is timing, there's two options. Either this is going to be completed before the 1st of July 27. We're going to have a $470,000 capital gain. There's going to be no capital gains tax if that's all done, and we can get the 2.1 million valuation at the 1st of July 2027. So that is one option, no capital gain tax. Or if it's delayed, Bob takes his time, he sort of starts it off in July 27. Well, then that capital gain is going to come after the 1st of July 27. So obviously we'd try and get a valuation at the start, try and get it valued as high as possible. If it had its consent in place or partway through it, we'd try and get the valuer to value as high as possible because that's going to reduce our future capital gains and capital gains tax. But if that hasn't been started and nothing's really there, that $470,000 capital gain is going to come after 1st of July 27. Capital gain tax bill, 131,600. Ouch. So two big tips. Yeah, really try and get those projects finished. If you're thinking do it now, wait a little while. Yeah, I'd be thinking how do we can we get that ready before the 1st of July, or at least be organized so if the election goes Labor's way, that you can get the project finished before that time. But just bear in mind, subdivisions especially, they take time. Yeah, a year and a half is sort of a good lead in. If you leave it 6 months or something, maybe you can't get it finished. Just a last point. Everyone, when they're thinking about tax, thinks Brightline. They think that they own a property for over 2 years under current Brightline rules and it's not going to be taxed. Just bear in mind that there's lots of other taxing provisions. This case, subdivision rules. What you might find is that the current capital gain might actually be taxed by subdivision rules. So just get some advice around that. Subdivisions is one, but there's lots of other taxing provisions. So if you're looking at doing something like this, just get some advice first and just make sure you're not caught by another tax provision anyway. In this case, Bob actually gets an exemption to the subdivision rules. So under current rules, his gain is a capital gain and not taxed. So yeah, hopefully you found that useful. Hopefully it's got you thinking, what do you need to plan ahead, and especially around the projects being completed. It's not something that you can quickly do in a month or two, especially for subdivisions. So start planning, start thinking, is there anything that you might need to get finished? How long is it going to take? Start your pricing and your process and things like that. Discuss with us subdivision rules if you're looking at doing them, and other tax rules. If you're building a house and potentially selling it, again, there can be other tax rules with it. So get some advice. And if you noticed online, we've got a whole lot of free chats available this week. So if you want to just have a chat about things like this, book in for a free chat. I'll ring you at that time. Just note I can often run a few minutes late, but I will ring. And yeah, just have a free chat with us. And yeah, generally I can just help people, or I can point you in the right direction if it's not our field. Thanks a lot for your time. See you later. Bye.